Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today is June 14th, 2023, and we have just wrapped up the FOMC meeting. In today's video, I'm going to walk you through 3 takeaways from the Fed's decision to pause its hiking cycle. At the Bitcoin Layer, we are advocates of self-custody, and there's no easier way to self-custody your Bitcoin than Envoy. Stay tuned to the video to find out more. Now, let's start with what happened today. The Fed decided to pause its hiking cycle for the first time in 14 months. The Fed got this hiking cycle underway in March of 2022, last year, when inflation was already above 6%. So already a little bit late to the party. It then proceeded to hike rates by 50, 75 basis points a few times, then back down to 50, 2 more hikes of 25 basis points, and today, for the first time, made no interest rate action, meaning that it didn't raise or lower interest rates from its current rate between 5 and 5.25%. The Fed also said that further interest rate hikes are possible and likely with inflation still well above their 2% target. The Fed paused its hiking cycle today because they said 5% is a large increase in interest rates, and the Fed wants to wait and see how that is affecting the economy now. On to my main takeaways from the Fed meeting today. Number 1, the Fed is going completely off of feel, not data. What do I mean by this? The Fed got this hiking cycle started in March of 2022 when inflation was already above 6%. Why? Because they said that inflation was transitory. This was a feel that they had that inflation would be going away sometime soon. That feeling was obviously wrong and they were late to the party, okay? Then inflation peaked in June at 9%, started to come down. And earlier this year, it was clear that inflation would be falling down to the 3% range. At that point, they could have said, inflation is coming down towards our target. Let's pause here and see how this unfolds. No, but their feel that they went off of was that this was going to continue and they needed to be more restrictive with policy. And now they are pausing. Why? Not because inflation has come down to their target, but because they feel that it is the right time to pause and let the markets digest. Now, there are people on both sides of the coin here. There are those that think the Fed should still be hiking rates, and those that think the Fed should be cutting rates. Let's address each one of them. First, to those that think that the Fed should still be hiking rates, they are saying that because inflation is still well above the 2% target. Wages are still very strong. Employment has not turned yet, and the economy is not in recession yet. For all these reasons, the Fed should be hiking more, but they're not. Why? Because they don't feel that they should be hiking still at this moment. There are those that think actually the Fed should be cutting rates now because we have had problems in the banking system, the economy is slowing, and that disinflation is setting in, and we need to adjust rates a little bit down to let other borrowing markets digest these higher rates and get some reprieve. We've seen a big slowdown in the real estate market, so those are some signs that the Fed should be cutting. But the Fed has decided to pause here because they feel that it's the right time. And I quote Jerome Powell from his press conference today. We judged it to be prudent. We judged it to be prudent means it's our feeling that this is the right thing to do at this time. Joe and I take self-custody very seriously, and it's time for you to get your Bitcoin off of exchanges. This video is sponsored by Envoy, a simple Bitcoin wallet with powerful privacy features. It takes 60 seconds to set up. You can get your Bitcoin off of exchanges right now. There's no middleman. This is the way that Bitcoin was meant to be used, self-custody. Download it for free in the App Store or the Google Play Store today. Now, back to the video. Can you see that the Fed is not data dependent? This is a fantasy, okay? They use data, sure, to lead their decisions and as inputs in their decision making. But when push comes to shove and they have to make a decision on what to do, they're going based mostly off of feel and reputation, with data being only a small part of the input. Now, I know we at the Bitcoin layer analyze the economic data all the time to see what's going on, but we are more doing that from an investment standpoint, which leads me to my second takeaway here. The Fed is a lagging indicator, and that the rates market actually leads the Fed and tells the Fed what to do. Why is the Fed pausing? Probably because it feels that it's the right thing to do because the curve is so inverted. 2-year yields have been through Fed funds for several months now. That means that the 2-year yield, the expectation of where overnight rates will be over the course of the next 2 years, is materially lower than where Fed funds is today. Now, the 10-year yield is inverted even more to the 2-year yield, which means over the 2 to 10-year horizon, the market expects rates to decline as well. So the Fed is listening to the rates market finally. The rates market is telling the Fed, you have gone too far on policy, and that policy rates are too high. The market has them much lower on a forward expectation, and the Fed will eventually get there because the rates market leads the Fed. Number 3, and this is a big takeaway here from what has gone on and why the Fed has paused its hiking cycle, even though inflation is still relatively hot for the last decade. That is that the damage has already been done to the economy here. Okay, 5% rates have already been levied on the economy and across borrowers. That damage has already started to affect real estate markets. We see annual housing price declines on multiple metrics. We see the number of houses sold also down much lower than they were a year ago, over 20% lower. And so the damage has already been done to the economy from a fundamental basis, from a hurdle rate basis, which means now that rates are at 5%, from the treasury bill side, every single investment gets measured against that. So when you have a risky investment that promises 6% or treasury bills that promise 5.5%, the decision to avoid risk becomes a lot easier. All of that damage has been done. The Fed is aware of this. So it makes sense that this is the time to let the market and the economy digest all these rate increases that we've had. Now, it's our judgment that they've gone too far in that we had March and May banking failures, and that the Fed probably needed to stop right after it saw the first trouble in the banking sector in March. But what's done is done, and here we are, the Fed has paused. Now, to this idea that this is a skip or a pause on the path to more hikes, it just is not our base case scenario here. We see the Fed going from 0 to 5% on rates in a very short amount of time. The economy is slowing. The Fed is aware of that. Disinflation is setting in. The Fed is also aware of that and acknowledging that. And we do believe that this will be the terminal rate. Thanks for sticking with us today at the Bitcoin Layer. Definitely subscribe to our newsletter at thebitcoinlayer.substack.com. You can get our free weekly newsletter every Saturday morning, giving you what's going on in Bitcoin and rates. Have a good one. Thanks for watching. Today's video is sponsored by Envoy, a simple Bitcoin wallet with powerful privacy features. It's time to get your Bitcoin off of exchanges and into self-custody today. This wallet is easy to set up, takes only 60 seconds, no middleman, and you're using Bitcoin as it was meant to be used. Download it today for free at the App Store or Google Play Store. Make sure to subscribe to this channel and hit the bell icon to be notified whenever our next video drops. Thanks for watching.